Good morning, it's Thursday, 2nd of June. I'm Tom Elliott and this is my market report. Well, things got a bit bleak on the stock market today. Last night the Dow Jones Index fell 280 points, that's 2.2%. And around about midday the ASX 200 Index was down 1.8%. Now the reason things are looking bleak, well, there's quite a few of them. As we know, and this is going back a year now, there's still this very high probability that the Greek government will default on its debt. And that gets the whole market nervous because, of course, they worry about government defaulting on debt, just as they did about companies defaulting back in 2008. And we all know that led to the global financial crisis. Secondly, in the US Congress, President Obama sought permission from the Republicans, essentially, because they dominate the Congress, to lift the US government's debt ceiling from $14.3 trillion, where it currently is at the moment. The Congress said no. They say, Mr. Obama, you have to go and cut spending, perhaps on some of your Medicare programs. As a result, there is a risk that the US government could become financially paralysed, as it was just 2 months ago. On top of all that, well, locally we've seen commodity prices come off a fair bit. That has some people worried that maybe China won't keep growing as strongly as both the mining companies and indeed the government with its resources tax and budget surplus is still forecast for 2 years' time. Again, if China doesn't keep growing, those sorts of numbers are unlikely to be achieved. And then to top it all off, we saw that the GDP figures for the March quarter came out yesterday. Now they showed a rare 1.2% decline in Australian GDP for the 3 months to March 30. Now you might think, oh God, does this mean we're heading for another recession? The answer is probably not, but still the news could be bad. Now the reason, of course, the Australian economy went into a decline during the March quarter was, of course, the devastating floods, mainly up in Queensland, but as well, of course, in northern Victoria. Now, this had a big impact on economic activity. Now, Treasurer Wayne Swan has come out and said, oh, well, nothing to worry about because business will rebound, consumer confidence hopefully will rebound in the June quarter. Business spending was actually quite strong in the first few months of the year. But I'm beginning to have my doubts about this. Retail expenditure, I think, is very weak. The savings rate has jumped to 11.5%. Now, for the past few decades, outside of superannuation, Australians have saved virtually no money whatsoever. In fact, collectively, we've all kept going into debt. Now, all of a sudden, we're paying down debt, we're not spending money in the shops. And that accounts for the fact that David Jones yesterday, 1st of June, first day of winter, has started its winter sale. They're effectively saying there are no full price sales from the official start of winter. And as we know, when June is not really when it gets cold, and then it's July, August, September. So the retail sector is doing it very tough. David Jones shares were down around 12 cents this morning. Myer shares are weak. JD Hi-Fi, Harvey Norman, similar conditions. They're all struggling at the moment. The big banks also have been absolutely smashed this week. Now, on top of the weak retail sales, there's a lot of anecdotal evidence and some genuine statistical evidence that the local housing market is slowing. Interestingly, the biggest price declines have been in the resource-rich states of Western Australia and Queensland. That suggests that there was a lot of speculative activity in those markets. Sydney prices have been reasonably stable. Melbourne prices are probably down 2 or 3 or 4%, although it depends which suburb, which area you're looking at. But given that the value of households is the foundation for so much of Australia's wealth, and indeed for huge exposures on the big four banks' balance sheets, were we to see another decline or a further decline in local house prices, that could have quite strong ramifications for the banks. As a result, bank share prices a lot weaker this week. So overall, the news isn't great. Interestingly, the Australian dollar is holding firm at around 106.5 US cents. This suggests that the markets, in their collective wisdom, and let's remember, markets don't always get it right, the markets don't think the Reserve Bank is going to be cutting rates anytime soon. In fact, the fact that our dollar has stayed strong suggests that rates could still go up 25 or 50 basis points in the next 3 to 6 months. Still, we'll see. Uncertain times. Talk to you again next week.